Joining us here at Post 9, Casey's General Store's CEO, Darren Rebelez. Thank you so much for being here, Darren.
Thanks for having me,
Appreciate it. So your 3-year strategic plan, your growing store count, 350 stores by the end of fiscal year 2026, accelerate food offerings and prepared label offerings. How do you plan to get there? Is this organic growth? Is this M&A? Big CapEx? What do you think?
Yeah. Well, we're going to do it through a combination of things. About our growth algorithm is about half of organic growth with the existing store base. So driving same-store sales through merchandising mix, our prepared foods that you talked about. We're the 5th largest pizza chain in the U.S. And so that's the crown jewels of the Casey's brand. And so we're really accelerating on that front. But then the other half is through new unit development. That comes both organically and through M&A. And something interesting about our industry is about 2/3 of the convenience stores in the U.S. are operated by chains of 10 stores or less. So it's very fragmented, very small operators. And in the current environment, it's a very challenging environment for them to operate in. So it really opens up a wide opportunity for store chains like us to acquire and really add value to those stores. So.
And benefit from scale potentially. And if I'm kind of reading between the lines here, you're referring to the inflation pressures, which I was looking at the transcript from your most recent earnings call earlier this month. You say that inflation pressures have subsided some, of course, depending on the category. How much of those pressures had you been passing on to your customers? And now that they are subsiding, does that change the pricing at all for the items in your store?
There's been a mix of that. On the consumer packaged goods sides, a lot of those cost increases that the manufacturers experience got passed on to us, and we've passed those on. We've been able to keep up with that. I don't see those prices subsiding. On the prepared food side, is more commodity driven. You think of proteins, cheese in particular for us. We use about 30 million pounds of cheese a year, so it's a big input cost. And we try to price through the cycle, so we don't necessarily raise prices all the way to cover that cost, because that commodity is a little more volatile. So we know those costs are going to come down at some point. So we really try to maintain that value proposition for our guests. And we're seeing that happen now. And so we've been able to keep our unit velocity on the pizza business really steady and now accelerating because we've been able to maintain that value proposition.
It's interesting. General Mills, for example, had an earnings print today, and they did take some price, but volume's beginning to suffer, and I just wonder if now's the time to play a little more hardball when it comes to at least packaged goods. Are you not sensing that?
No, we're not sensing that at this point. I think the prices have subsided a little bit. I mean, I shouldn't say that subsided. The cost increases have moderated.
Slowing.
They're slowing,
right.
Yes. They're still going up, but they're moderating from where they were 6, 9, 12 months ago.
What are you seeing with regard to kind of the state of the consumer? You fit in a certain area where if we did see a recession potentially, you could see an uptick in sales. Are you seeing any evidence of that right now? I know you're largely based in the Midwest.
Right.
Is that correct?
Yeah, that's correct. We're in 16 states in the Midwest. Interestingly enough, about half of our store base is in towns of 5,000 people or less. So very much a rural play. And then smaller towns, smaller cities, think 20,000, 50,000 population. And so those consumers, about 3/4 of our consumer base earns $50,000 or more a year. And so that doesn't sound like a lot when we're in New York City, but our markets, the states that we operate in, the most expensive state to live in our footprint is ranked 22nd in the country in terms of
Which
cost
one is
of
that?
living.
Is that
That's
Illinois?
South Dakota.
Oh, South Dakota.
Actually. Yeah, I would have guessed Illinois too until I saw it. But so 7 of the bottom 10 costs of living are in our footprint. So it's a very affordable geography. So $50,000 goes quite a way.